Hi everyone, today I'm going to be doing a guest presentation on the International Banking Services and Capital Adequacy Standards on Chapter 11, pages 281 to 289. So I have divided the topics into two parts. Part 1, which includes international banking services and the services that are provided by international bankings, as well as who is actually going to be benefiting from international banking services. And in part 2, we're going to be talking about the capital adequacy standard, which includes the Basel Accord and the three Basel tiers. So, banking services. Many of us have opened a bank account, either checking our savings, and we use to spend our money that we get through our jobs. But what about if you want to open a business abroad? Let's say, like in China or some other country. Then you will need to open a bank account with a bank that does international banking that will provide you services, and services are as follows. The international banking services do not vary much from domestic banking services, meaning that if you go to your bank, you might expect to get a credit card or a debit card. You might also get some advice on how to buy a house or how to invest money on your Roth IRA. So it's pretty much the same, but it's at a much larger scale. For instance, one of the services that the international banking services provide is they offer foreign loans. Another one is that they offer foreign exchange services to conduct cross-border transactions. They also have international funds transfers services that will allow you to facilitate transactions. They also offer hedging services for foreign currency receivable and payables through forward and option contracts. And like I said, they also provide consulting services and advice to the clients, which can include services on foreign exchange and hedging strategies, also the interest rates and currency swap financing and international cash management. Not all of the international banks offer the same services, but the ones that they do, they will be considered universal banks or full service banks. So an example would be US Bank. So this is my bank. What I did, I went to deposit a check, and then I asked the bank teller that if they offer international banking services, and they did tell me that they do have treasury management solutions that would be, if you do not exceed a certain amount of money, of course, I think it's 250 million, and they do offer international payments to over 180 countries, so they will give you a complex or a much more broader range of where you're going to be doing your businesses. They also offer foreign currency accounts in 23 countries. They can also accept your card solutions in 65 countries, and they have also expertise in audit payments and reporting across border shipments. So these are some of the app services provided by US Bank, and there are also other banks within the Palatine area. If you live in the Palatine, that you can actually just Google and search for international banking services. So US Bank is considered a semi-large or medium bank, but above that we have a large international banks or that provide banking services, and they do borrow and lend in within the euro currency market. They are members of the International Loan Syndicate, which is that a lot of banks they would gather together to add money together or gather within themselves to borrow to multinational corporations that they need projected financing and sovereign for economic development. So these are banks that offer larger amounts of money. So who needs the service of an international bank? So if you are planning on opening a business later on within probably a year or who knows, you might be trying to look into opening one of these bank accounts. because they will allow you to make more transactions with other countries or in different currencies, different markets, and this will facilitate a trade. Um, Again, this is for people and investors who want to operate in a different country. Capital Adequacy Standards, Chapter 11. This will be the part 2 of my presentation. What is capital adequacy standards? These are standards regulated for banks to determine how much liquid capital they must keep on hand to meet the overall capital adequacy standards, which means the banks should have enough money in case of any problems or losses. This cash would be used for the banks to bail themselves out of any trouble that they might have. They are regulated by the Basel Accord. This is a set of recommendations that regulates banks industries, which is located in the Bank of International Settlements (BIS) in Basel, Switzerland, and consists of central banks from around the world. The Basel Accord is composed of 3 versions of the Basel Accords, which have Tier 1, Tier 2, and Tier 3, which we will look a bit next. So the 3 tiers of the Basel Accord. Tier 1 was created in 1998 and is focused on the minimum capital and liquidity requirements. Tier number 2 was created in 2004 and it focuses on supervisory reviews processes for firm-wide risk management and capital planning. And the most recent one, which is a tier number 3, was created in 2010 and focuses on disclosure and market discipline. To summary, international banking services are not far away different from domestic banking services. They're very similar, but they do offer some different services. And international banking, they do facilitate cross-border transactions, meaning that you can actually do a business with China, which they have a different currency, and Europe as well. They also provide consulting services. One of them would be foreign exchange hedging strategies. And not all of the international banks that provide services have the same services. Some of them are limited, and some of them are very, very complex or have many services that a company could take advantage of. And these banks are called universal banks or full-service banks. Capital adequacy standards. This is a part 2 of the presentation. And this is a set of regulations that requires to keep a minimum amount of money within the bank to cover over any problems. So for instance, what this means is that, let's say that your little brother is in the park and is telling you, hey, can you keep these $10 for me? I don't want to lose them. So you go ahead and keep the $10. And then your little cousin comes and says, hey, can you borrow me $10? I wanna buy a popsicle. So you had, hey, I have the $10, and then you give them the $10. Well, you do not know if your little cousins can actually cover those $10 later on. So let the little cousin comes back and say, hey, I only have $7. Well, you should have had at least $3 in your pocket to cover those $3 that your little cousin owed you, because later on your little brother is going to come back and ask you for the $10 that he gave you to keep, so he wouldn't lose them in the playground. So this is the most simple explanation, but of course it's much more wider than that, much more complex than that, but it's a simple explanation. And we do have the 3 Basel tiers, which when escalated from number 1, which is focuses on the minimal capital and liquidity requirements, which is what we were talking about, that we should have at least a certain amount of money before we can actually start borrowing, just in case the person that we're borrowing the money to cannot pay us all back, and that way we can actually cover some losses. The part 2 is the supervisory review processes for firms-wide risk management and capital planning, and number 3 is the disclosure and market discipline. So I hope these 2 topics were very, very interesting for you. I know they were. I had a lot of fun searching for them and I learned a lot of cool things, but I had to kind of put everything together and make it simpler for you to understand, because it was kind of hard for me to understand. But if you're looking to learn more about it, like I said, go to a bank and ask for some international services, like I did. And I also went to the Best Vapor website to read more about it. And here are my the next slide is going to be my resources. So these are my resources. You can take a look at them. I had a video from YouTube, and most of them is from random websites. Thank you very much for taking the time to listen to my presentation.